Good morning. Welcome to the B.F. Anderson Techno Fundamental Report for September the 5th. Rule number 1, don't lose the money. Rule number 2, never forget rule number 1. With any portfolio management strategy, you've got to have risk controls. So we'll talk about risk controls this morning. Walter Deemer is an interesting fellow. It's an interesting book. And he basically has, the book is really easy read. I mean, it's just a bunch of quotes, but it's good. And it says here, no stock in an uptrend has ever gone bankrupt. He's got a point. Price is everything. So, we're dealing with an auction market here. With the traditional auction market, you have all the buyers in the room and the sellers aren't even there. So if you go to a cattle auction or an art auction, everybody wonders how come the prices are so high. Well, there's just no sellers. So with securities markets, you have that constant ebb and flow between buyers and sellers. So price is everything. Up is good, down is bad. Never confuse your views with what is actually happening in the stock market. Let the market tell you what to do. It's best. We're going to talk about trend following, which has a lot to do with that. There's no such thing as a one-decision stock. Anyway, interesting quotes. Peter Lynch says, nobody can predict interest rates, the future direction of the economy, or the stock market. Dismiss all such forecasts and concentrate on what's actually happening to the companies in which you have invested. So again, back to risk management, you really want to be a know-something investor. You want to know about your companies. You want to understand, really, there's three things we really try to understand. First of all is the story. What's the business plan? The second thing would be, what are the numbers? How does the balance sheet look? How's the income statement look? How does the cash flow look? So it's important to be a know-something investor. Now, trend following is something that we're very active in. It's important if you think about it. If the prices are trending down, you've got a problem. And here's a long-term graph of the Dow. You can see uptrend. So trend following is very, very simple. It's a simple concept. Trend positive, then the trend goes negative. Look at this, man. That was a negative sideways trend starting in right around 2000 during the dot-com bust. Market went sideways for a long time, and so this was a very difficult period to make money in the stock market. However, back here in 2003, that's when Apple popped up with the iPhone, and you have to be looking for those individual situations. How to recognize a stock market power trend. This will be an interesting exercise this morning. This is a new indicator I've just learned about. It's been published by Investors Business Daily, which is a very fine publication. William O'Neill founded it. Basically, what they're trying to say is that last Friday we had a power trend buy signal. So let's look at the four rules that you have to adhere to. The low for the index is above the 21-day exponential moving average for at least 10 days. So if you look here at the S&P, now this is as of last Friday, we were above. Here's the 21-day, which is this, the blue is the 21-day. The 50-day is the red. So we were above the 21-day for 10 days. Then the 21-day exponential moving average is above the 50-day simple moving average, which it did, and it has to do it for 5 days, which we have 5 days in here. The 50-day line is in an uptrend. So again, the 50-day line is in an uptrend. And then the market has to close up for the day, which it did. It was up 1% last Friday. So it's an interesting thing to keep an eye on. I'm just now learning about it, so I thought we might just kind of look at it a little bit more as we get into the video. Also, the power trend will usually end when the 21-day crosses back below the 50-day. So we have to watch for that. So it's an interesting indicator. We'll watch it. We'll study it. And, the way you use things like this is it's how do you think? Are you thinking negatively or are you thinking positively? Well, when all the news out there is bad and the market's going down and there's been a lot of volatility, it's going to be hard to think about anything positively. So with these indicators like this one, it kind of wakes you up a little bit, makes you think a little bit more positive and not so negative. Now, back to trend following. This is Boeing. Now, you can see here, going back to 2019, this stock has done nothing but trend down. So then you would say, okay, well, let's check the numbers out. Well, the numbers really aren't very good. In fact, they've eliminated the dividend. They have negative cash flow. Revenues are down 15% for the year. Earnings, the earnings have gone negative. They've got some cash, but they've got a lot of debt, and they don't have a very high current ratio. So the chart would tell me to go look at these numbers, because I think I would want to pass on this as a particular investment. So you can look at something like Walt Disney, same thing. You've got a real negative trend here. So you should really go check the numbers. Now, I also wanted to mention the price of oil has really been dropping. I just wanted to make a note of this. I have the trend meter down here. It's about to go into the pink. So oil prices are dropping. And, there's one analyst out there that's saying that he thinks Trump's going to win the presidency, and as a result, there'll be a lot more oil production, and that's why the price of oil is declining. So, we'll see. Now, let's do this exercise on the the power trend. Now, remember these rules, because we're going to have to kind of remember them here. The interesting thing to me about the power trend exercise is that on the NASDAQ has not given the signal. It has to be either the NASDAQ or the S&P. And the S&P has given the power trend signal, but the NASDAQ is not. So we're seeing a lot of weakness, mainly in technology. It's something that is concerning. Now, the mid caps, they did give the power trend signal. You can see above the 21-day for 10 days, above it, and then this is above the 50-day for more than 5 days, so forth. Again, I have to remember all the rules. There's quite a few. New York Stock Exchange, same thing. It gave a power trend signal. However, we've been getting a sell-off this week, so it's just not, the chart is really kind of looking iffy. But I just want to point out the power trend concept. Small caps gave the power trend concept or power trend signal. So the small caps are actually holding up better than the NASDAQ. S&P 500, again, we talked about that. It did give the signal. So the S&P is stronger than the NASDAQ. This is unusual. This is a change of character. We just need to be aware of it. Now, here's the equally weighted S&P index. Same thing. We got the power trend reading. So we want to, be open-minded here. We don't want to, run for the exits. But I am going to tell you, I have one indicator that I've been using. I've been using this indicator for at least 15, 20 years, and it's been a good one, and it's called the aggression index, and it basically says when you're moving up and trending up in the aggression index means that the NASDAQ is outperforming the consumer staples. Now, these big institutions that pretty much run the volume on the markets, when they start to see trouble, they can't necessarily go to cash, so what they'll start doing is reconfiguring their portfolio into things like Procter & Gamble and Philip Morris and Coca-Cola and things like that. So when that starts to happen, you get a breakdown in this indicator. Now, if we just go back to 2021, you can see here we got a rally we peaked on this particular indicator, pulled back, held this moving average, then rallied again, but then broke down again, failed rally, then started to sink. And this was the bear market of 2022. We're seeing somewhat of a similar pattern here. I mean, you can see where the moving average, the ratio has broken below both moving averages. We did an attempted rally, then we're breaking down again. Now, what would be the next part of the signal that would somewhat confirm the downtrend would be if we get a death cross of the 10-week moving average crossing below the 40-week moving average. So this is a concerning look. What I would just simply say at this point, be very patient, take your time in here. September does tend to be a difficult month, and usually the market makes a low in October. So if you have any questions, please let me know. Thank you very much.